Hey there, it's Walter, and a quick lesson in science and how this can apply to your trading. Have you ever seen a trade set up like this one right here where you got a really good one? In this case, it's a kangaroo tail. And it turns out that actually it didn't make money. Instead, you got stopped out as would have happened here on this trade. Well, for a lot of people, that can be really upsetting. But for some people, that's not really as upsetting as missing out on a trade. Now, let me explain how science works. If you've had classes in statistics or experimental design, this is probably old hat to you. But if you haven't, let me give you a quick brush up on what I'm talking about. So there is one type of error they call type 1 error. And this is where the test says, one result says, hey, for example here, hey, you're pregnant, when in fact it's false. You're not. So that's a false positive. When you say something is true, when in fact it's false. The other one is when it's called a type 2 error, funnily enough, and that's when you say, hey, you don't have something, right? You have a negative result, but in fact, in reality, it's true. So here, you're not pregnant, negative result. And she says, wait a minute, what's this basketball in my stomach? So that sort of thing is what's known as a type 2. Now, what does this have to do with trading? If you're like me, you like to see things visually. So this is what we were talking about in sort of a visual form. The type 1 error is here and type 2 is there. So if your test, which is what this is talking about, the perception or your measurement, if it says something is true and it actually is true, then everything's good. If your test says something is false and it's actually false over here, everything's going well as well. However, the problems come in when your test says something is true, but in reality, it's actually false. That's a type 1 error. You say something is true, you're pregnant, when in fact you're not. The other type of error is when your test says something is false or doesn't exist, when in fact, in reality, it does. And that's a type 2 or a false negative. So what does this have to do with trading? Well, let me show you. You could probably look at what we just looked at in the same light as a trader. You could have on this axis right here, your trade system. And on this axis, you would say this is the actual result. So either there was profit in the market or there wasn't, and there's no trade available according to the system, or there is a profitable trade available. Let me explain. If your system says there's a profitable trade and there is, then everything's fine. If your system says, no, there's no trade, and in fact there was no trade that had profit, then of course you're also right. So that's no problem, right? But let's talk about the errors. Type 1 error is when your system says, hey, time to take a trade, there's a profitable trade, and in fact, it turns out to be a loser, right? The other one is when your system says, no, there isn't really a good trade out there, and in fact, there was an available trade. That's a type 2 error. Now, you have to decide what's more important to you. If you like the high win rate, then you're going to fall into this category where, you know what, you're trying to avoid taking trades that end up not working out. That's a type 1 error. When you take a trade and it doesn't work out. The other type of error, the type 2, is when you miss out on opportunities. There actually was a profitable trade available, but your system missed it or basically said, no, it wasn't good enough. Now, here's how I trade, and if you're in the Daily Trader, you know this about me. I don't care about type 2. Who cares if there were opportunities that I didn't take? I don't care about that. Doesn't matter. Does not matter to me. I'm very, very picky, as you will know from the Daily Trader if you follow my trades, and that means that I'm more worried about this. I don't want to take a trade and it turn out to be a loser. And most traders are like that. They don't want to have a lot of losers. So this is where I fall in to this area, and I think that most traders also fall in here. Very few traders are, everyone's upset when you miss out on a trade, but very few traders are at that point where they just want to keep taking a bunch of trades because trades take energy out of you. I'll explain more about this in the next video, but for right now, I just want to explain the difference between the type 1 and the type 2 and which one is more upsetting to you. Is it having a trade that didn't work out or missing out on a trade that would have worked out? So that's basically what you have to decide. I've decided type 1, and if you like that idea, if you follow that sort of trading pattern like I do, then you probably would enjoy the trades in the Daily Trader. So you should take a look at that. if that's something that appeals to you. I'll see you in the next video, and I wish you very happy trading. See ya.